Hello and welcome to the December 28th edition of the Gold, Goats, and Guns Short News. My name is Tom Luongo. We've got a lot to talk about. Today I want to talk about Donald Trump and the markets. Markets have been really volatile this morning, all week, and for the last couple of weeks. I was on Fault Lines this morning with Lee Stranahan and Garland Nixon, and we were talking about a lot of this stuff, and they asked me, about all the volatility. And I said, well, panics look like this. You get a panic before a holiday, and then you get a nice big jump after the holiday. And then we have what looks like a solid rally into the weekly close Friday and coming into the weekly close. So, because the markets should be open for a half day on Monday. But market collapses are what's needed to create the next rally. You have to understand that markets are all about greed and fear. They're all about our perceptions of prices, right? And valuations. In the grand scheme of things, Jim Sinclair used to call this management of perspective economics, or MOPE. And he's right, but eventually fundamentals always reassert themselves. But what's important to understand is that no value is absolute. There's nothing that has any intrinsic value. All value is subject to whatever's in our heads. Because what is one man's garbage is another man's salvation. Just the way it is. So, and that's ultimately the forces that create market bubbles and market collapses. And the perma bears in the marketplace, looking at valuations in U.S. equities, and honestly, even global equities, have been screaming bubble for the last 2 years. But I don't know. It didn't really look like a bubble to me. I mean, I remember 1999. That was a bubble. I remember last December in Bitcoin. That was a bubble. That was a mania. This isn't a bubble, right? Valuations may be stretched. Valuations may be high. Valuations may be high and stretched because of 10 years of accommodative central bank policy. But that's not a bubble. Because this has been, as Martin Armstrong likes to point out, the most hated bull market in history. And it's not over yet. And Donald Trump has been making the mistake of thinking that a rising stock market is a reflection of his job as president. So a falling stock market had him panic. And he kept making the markets more and more and more unnerved with every one of his policy decisions this year. Him lashing out and sanctioning and tariffing everybody, poking a trade war with China, forcing Canada and Mexico to come to the table and sign a new NAFTA agreement, which isn't really that much better than the old NAFTA agreement. Threatening fire and brimstone over anybody who dares to use a dollar in trade in a way that he doesn't approve of. That's basically the way he's been running things for the last 9 months. Frankly, that unnerves markets. Eventually, they just say, okay, that's enough. Because while confrontation in the boardroom and during negotiations over a business deal are perfectly legitimate, we never see those in the real world. And perception of consistency is what markets want. It's what investors want. They want certainty. They don't care if that certainty is that, okay, the world's going to suck for the next 5 years, but if they're certain the world is going to suck for the next 5 years, they can invest accordingly. They can decide and make decisions based on a relatively high degree of confidence of what's coming next, as opposed to, I have no idea what's going to happen tomorrow because Trump could wake up and, nuke China. That unnerves markets. Okay? And while that kind of chaos is great when you're negotiating and you keep the other person on edge during a negotiation, Trump's not negotiating with the equity markets. Okay? He's not negotiating with bond investors. Okay? He's not negotiating with pension funds. Okay? He's negotiating with finance ministers and heads of state. That's completely different. And he finally had to come to the conclusion, because I just saw something on Zero Hedge which says he finally consulted a hedge fund manager and said, how do I stop the market from falling? Well, stop being a jackass. Stop unnerving everybody. Cut a deal with China. Stop sanctioning everyone. Restore a little consistency and a little normalcy to the marketplace, and maybe you'll get a little consistency and normalcy. This is what I mean when I say for a long time now, Donald Trump is economically illiterate. I don't mean to bash the guy. I'm not really trying to bash him here. I'm trying to make you understand what's been happening for the last 9 months and why this has been going on. And now that he's finally gotten slapped by the market for acting like an idiot, like a gorilla without a jockstrap, he's going to probably now have to sit down and go, okay, time to calm down, time to tone the rhetoric down, time to move into another phase. Sanctions and tariffs unnerve investors. They slow global trade. When people are nervous about what to do with their money, they go to cash. They stop trading. They stop spending money. Yeah, we had a great Christmas season. So what? I had a great Christmas season because there was domestically a lot of consumer confidence. But domestic consumer confidence does not make a global equity market and a global economy. Those are two completely different things. Don't conflate one with the other. So I'm really expecting him now to, in January, supposed to meet with Xi Jinping. He'll probably cut a deal. He's going to back off on criticizing the Fed for, them. I mean, honestly, him going after Jerome Powell for raising interest rates the way he did made him look like a thin-skinned bully and a paranoid lunatic. It just adds to the argument that the Democrats are going to use to try and get rid of him over foreign policy issues, pulling out of Syria, pulling out of Afghanistan. That's what they'll go after him for. But if he does all that, if he stops criticizing the Fed, if he cuts a deal with China, he tones down the sanctions and rhetoric, no more sanctions in 2019 on Russia and Europe and Iran and everybody else, stops that process, which is what I think is going to happen here. The markets don't want any of this. Investors don't want that. Investors don't share Trump's view of Iran as the source of all evil in the world. Got news for you. And ultimately, presidents have to ultimately bow to markets. Because if everybody's 401k is falling into 2020, Trump doesn't have a prayer in hell of getting reelected. And don't think for a second the Democrats are going to help him keep the stock markets up. Are you kidding? The Democrats are hoping that the stock market crashes and that there's a sovereign debt crisis. They can blame it all on Trump. If he stops now, he now has an opportunity. And that sets up two things. And these are the take-home points. And for those of you who dropped out at the 5-minute mark, you're going to miss the most important part of the story today. One, a trade deal with China and a more predictable and less confrontational Trump puts the pressure back on Europe. It makes the United States a more desirable place to put their money. Investors to put their money. So as the political breakdown in Europe accelerates, the United States is now truly going to be seen as a safe haven, which Trump has actually been undermining for the last year and a half, or 2 years. Certainly for the last year. You're starting to see that in European bond yields. Right? You're starting to see this in the in the yield curves of various European debt. You're starting to see short duration inversions at between 6 months and 2 years, depending on which country you're looking at. Go look at investing.com. Go look through all the European debt, and you'll see what I'm talking about. You'll see higher rates at longer duration. You'll see higher rates. You'll see humps in the yield curve, which is where investors. Those are the time frames where investors are getting nervous. That's where the demand for money is. Okay, so You know that I've been setting up and thinking that there's going to be a sovereign debt crisis in Europe if Trump begins to act responsibly and starts to say, okay, we're going to have some normalcy to U.S. trade, tariff, sanctions policy, and not this insane, crazy Ivan art of the deal nonsense, which it truly is. Then that's going to set up and extend this rally that we're seeing over these last 3 days in the Dow into the next bull market. Because as Europe collapses, all that money is going to come flooding into here. As long as Trump keeps his willy in his pants. We'll see if he's capable of it. All right, this has been the Gold, Goats, and Guns short news for December 28th, 2018. If you like what you heard today, please give a like and subscribe down below. You can follow my work over at goldgoatsandguns.com. You can also follow me on Twitter at TFL1728. You guys have a great afternoon. Have a great weekend. Probably a good New Year's. Be well. Keep your stick on the ice.